Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And so today, we're going to be talking about net income investment tax, also known as NIIT. Okay. And so cryptocurrency. Now, the net investment income tax, NIIT, can apply to a lot of different types of investments. I'm going to talk in detail what it covers, but I especially wanted to point out to my crypto squad because a lot of people have gotten very wealthy with cryptocurrency. It's created a lot of new wealth, and so with new wealth comes new taxes, baby. So, all right. So how does this look? So you go in, you're doing the right thing. You're paying your gains, your capital gains taxes. You're filing, you're reporting your cryptocurrency, and you're like, wait a minute, what is this right here? What is that? Okay. So let's talk about it. So, the net investment income tax is 3%, is 3.8%. on certain types of individual estate and trust investment income. Okay. There are limits. So if you're married filing jointly, 250,000, once you cross that threshold. Married filing separate is 125. Single is 200,000. Head of household is 200,000, and qualifying widower with dependents. Once you cross the 250,000 threshold, then you will be hit with the net investment income tax. Now, this is an additional tax to capital gains. So when you're talking about your cryptocurrency, whether you cash out or if you pay for products and services, or if you use one crypto to buy another, all of those counts as sales. All right. And you have to pay capital gains. So your net investment income tax is another 3.8% on top of your capital gains tax. And so that investment income, and this is from the IRS site, includes but is not limited to interest, dividends, capital gains, rental and royalty income, non-qualified annuities, income from businesses involved in trading of financial instruments, so my Forex crowd, commodities, and businesses that are passive activities to the taxpayer. So all of these different types of income fall into the net investment income tax. So you might have a combination of this stuff that, it can be Forex, it can be cryptocurrency, it can be rental, income from rental properties and, and commercial properties and that kind of thing. So understand that, if you've got some of all of that put together can produce a net investment income tax situation where you wind up owing a little bit more than what you expected. Okay. So how that looks is, like I said, you have your capital gains tax that you pay when you cash out your cryptocurrency, or you might sell a rental property or, something like that. And so if that puts you over that threshold amount, then not only are you going to pay the applicable tax rate for that, for your capital gains, but you're also going to pay that additional 3.8%. And the reason I'm talking about this is that, especially when you're talking about doing your own taxes, okay, you have to make sure that, if you meet this threshold, that it's in your taxes, because unfortunately, with the accounting for cryptocurrency, they don't talk about the net investment income tax. They talk about the capital gains, but not the net investment income tax, because they really don't know if it's going to apply to you or not, because cryptocurrency can be just one part of it. But because cryptocurrency, like I said, has produced a lot of new bosses. Okay. We got a lot of six figure earners with cryptocurrency. I have seen people earn $1 million from cryptocurrency. Okay. So that, so if you don't know about net investment income tax, the flip side of that is when it catches up to you, then you have an issue of underreporting and then not paying your taxes, which would result in additional penalties and interest. because, it's not like you weren't trying to do the right thing. It's just something that you didn't know. So if you have earned a lot of money in the crypto space and you're filing your taxes, you decide to cash out. And this is only when you cash out. Okay. Let me be clear about that. When I say cash out, meaning that if you decide, okay, I'm going to sell my Ethereum and take the money and do XYZ, that counts as cashing out. If you decide that you're going to take your Ethereum and buy Ripple, okay, that also counts as a sale. Okay, so when you sell your cryptocurrency, that's the better term to use. When you sell your cryptocurrency and that produces a gain, okay, depending on how much that gain is, if it meets those statutory limits, then you're going to have that additional income tax. All right. And if you don't know about that and you're doing your taxes, it may or may not show up. Okay. So, but it's got to be something that because if you don't, then like I said, on the flip side, you're going to be getting a notice from the IRS saying, excuse me, you owe us some more money, hunty. Okay. So yeah, this is a quick one, but I'm telling you, this is something that can really cause you some problems. So when you are, deciding to manipulate your cryptocurrency, either through buying other cryptocurrency that is not an even exchange, when you exchange one cryptocurrency to another, that is not a 1031 exchange, that is a taxable event. Okay. So don't let the smooth taste fool you. I know I heard a lot of people who have said, well, if I take my Bitcoin and I buy Ripple, it's cryptocurrency for cryptocurrency. That is not true. If you do that, that is a taxable event. And so depending on how much money we're talking about, it can trigger this net investment income tax, even if you don't have the money physically sitting in your lap, if you put it into, another type of cryptocurrency. So you definitely got to understand that. And especially when we're talking about people who are trading cryptocurrency and, and really bossing out. Okay. This is what happens. So it doesn't matter if you take your cryptocurrency and buy another cryptocurrency, and so you don't physically have that money with you. But if you have, if you trigger that gain that crosses those statutory limits, you still got to pay taxes on that. So you gotta know that, you guys. Okay. So that's it for today, you guys. Net investment income tax. Again, it's based on investment. So there's different types of investments, but cryptocurrency is the new wave of wealth. Within the last couple of years, produced a lot of multiple six-figure earners and is also producing some new tax bills. All right. So that's it for today's episode. And if you need to chat about your cryptocurrency taxes, definitely book a consult with me so that we can get you prepared for tax time. It's better to know now instead of at tax time when you got to write the check. Okay. So definitely book a consult with me. But thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, 9:00-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day, and I'll see y'all next time. Bye.